Reiterating the importance of infrastructure development, the Government of India has announced that India Infrastructure Finance Company Limited will be leveraged to finance strategically important infrastructure projects having large societal benefits. In our next session, we'll get to hear on the outlook of Indian infrastructure investments from IIFCL's perspective. I would like to invite Mr. P.R. Jaishankar, Managing Director, India Infrastructure Finance Company Limited, and Sudhir Pal Singh, Editor, ETInfra, The Economic Times, for this fireside session. Platform is all yours, Sudhir.
Ladies and gentlemen, a very warm welcome on our platform. I'm Sudhir, and this is the ETInfra Investors Summit, where we are today talking to P.R. Jaishankar. He is the MD of IIFCL, India Infrastructure Finance Company Limited. And the topic of the discussion is outlook for Indian infrastructure investments. Mr. Jaishankar, first of all, let me welcome you on this summit, and let me begin this conversation by asking you what, at a very broad and general level, what are the factors that typically drive the infrastructure sector's growth, and if there's anything specific that you can talk about Indian infrastructure projects in general, the nature of the projects, how are they different from overall infrastructure projects?
Yeah, thank you very much, Sudhir. First of all, let me tell you that infrastructure drives any economy. Spending of GDP, at least 1% of GDP on infrastructure is likely to boost India's GDP by at least 2%. This is already, recognized well. And it's also estimated that allocating an additional 1% GDP to public investment would create approximately 7 million jobs directly and 20 million jobs indirectly. That is worldwide. That's an IMF, article
estimate.
And looking at it from what's driving infrastructure in India today, I should say that traditionally infrastructure was pushed by the government through budgetary support. However, in the 1990s, we have seen a fundamental shift in the drivers of the growth in the Indian economy. And the important shift was towards private consumption and private investment-led growth. And that's why, the electricity, sector was opened up initially in 1991. Then the National Highway Act 1996 was amended to encourage private participation. And 1994, the competitive bidding process, that is the licenses for cellular mobile telephones and all, these all came up, subsequently.
Yeah.
The idea was that the budgetary support alone was not sufficient to address the growing needs of infrastructure. And therefore, we needed, private public partnership models, which actually were ushered in. And the main objective of this was to ensure a fast-paced GDP growth, which definitely happened. And we've had learnings from the past. We've now seen a number of infrastructure projects. So far, more than 9,200 infrastructure projects have been implemented in the country, of which 33% are completed and 48% are under construction. And you see, the way initially the private sector took keen interest in the development of the infrastructure was very, very good. And also, we've had very, very good successes. We've had the likes of, the Bandra Worli Sea Link in the roads. We've had the tunnel projects. We had Delhi Meerut Expressway, Eastern Western Peripheral Expressways, and so Vindhyatal thermal station. Then we now are seeing a lot of traction in the metro sector. All the airports, many of the major metros, the airports have been privatized, and now gradually we are working towards that. So many things have happened in the infrastructure, and how it was in the beginning of this millennium, or maybe the end of the last millennium, there has been a very, very marked growth in aspirations of the people. The way the quality of life, it has been, how the new infrastructure has actually impacted the quality of life of people, that has given a new spurt for newer aspirations, and people are now beginning to think big. I think the best thing that the present government has done is to ensure that we all think big. And now we are looking at larger infrastructure projects, mega scale, And I think it's all aspiration-led growth today. And we need to actually look at, how we can, meet these aspirations with a very, very structured and very, very strategic, intervention in this field.
Talking about aspirations, no doubt, and I completely agree. We are today aspiring to have a high-speed train in this country. Who would have thought that we would be dreaming of that? And work is on. Contracts have been awarded partly, of course. There's also a view that it may be slightly from an aspiration point of view. Perhaps it's slightly too much. There is a section of the people that believes that perhaps we should from a railway infrastructure point of view, for example, we should try to focus more on on network expansion, the general maintenance and upkeep and expansion of the railway network, rather than focusing on a project like high speed, right? How very briefly, yeah, and this is something I really would like to know your views on. How do you look at this entire debate?
Yeah, I think from the point of view of the investments, government has been undertaking a number of steps to shore up the financing of infrastructure sector, and several specialized financial institutions like the PFC, REC, IRFC, they all in the IRFC being the specialized institution in the railway sector, since you mentioned railways, they all exist already. The IREDA is there, IIFCL has been doing its job, HUDCO is there, so many other financial institutions in the development area of infrastructure is already there. Now the new institution also has been announced, and they are also looking at playing a role. So many things are happening in this front. Now the only thing is as far as long-term needs of financing is concerned, that needs to be strengthened. And looking at it from a central reservoir of finances, which is available for financing infrastructure, and not only infrastructure, all the other salient sectors of the economy is concerned, that's the capital market and the savers surplus, so to say, be it the pension funds or the insurance funds and all that. They are supposed to play a mainstream role in ensuring long-term finances. But as it may be today, the available finance for even all the financial institutions which are actually active in the field, there are limitations as far as the sourcing of long-term funds is concerned, and that's not just exception of India alone. World over, I think it's the same. Even the multilateral financial institutions like the JBIC or the ADB or the KFW, they have sources of funds which enable them, a capacity to lend for about 20-25 years. That's and right. Not only that, I think you look at it from other international financial institutions, be it a JP Morgan or anyone else, they don't lend more than 15 to 16 years. That's world over. So you look at it from individual institutions' point of view, it becomes a little limiting. But if you look at it as a system, how we have to look at long-term nature of financing infrastructure, we need to look at examples like how a channel tunnel in the UK was financed for 99 years, contract leased out to 203 financial institutions. Look at the way the Japanese railway lines were financed 50 to 60 years. We need to look at that kind of long-term finances, and if that were to be, I think we need to put in place a new financial architecture which enables financial institution, one set of financial institution to do the bit of financing in the first round and pass it on to a set of another set of financial institutions in the second round. There's a relay the infrastructure asset from one group to another group over a period of time, so that the overall amortization period of the infrastructure project is long. And the viability of the infrastructure project is decided by the long-term amortization, and it makes very good sense for the user also, because the long-term viability would automatically bring in a very low user charges, and which is better for the fundamentals of the economy. So I think we need to look at that kind of architecture, which can be put in place only through conducive regulations. The regulations as it exists today in India, it does not,
may not be enough.
It does not incentivize lenders as the other lenders across the world are incentivized to do this kind of, this technique of, long-term financing.
Okay.
So I think that's the difference here in India. It's not just one, it's not a story about one institution or a set of institutions. We need to look at the system and particularly the regulatory conducivity for this kind of, exercise.
Okay, yeah. So, how do you rate the country in terms of its current investment climate? Scale of projects planning, the kind of political or social stability that we have, policies.
Yeah, like I was telling,
factors like that. Tax clarity. That's one of the things that first thing that investors ask for, or availability of low-cost capital. How do you rate us?
See, I would say that the national infrastructure pipeline of the government of India, followed by the national monetization pipeline and the Gati Shakti, all are three pillars to actually prop up infra growth in the country. One, the visibility of the projects that are in work today, and a plan for funding the growth, that is by way of monetization of projects rather than anything else. And of course, the digital platform which actually connects the various players across the. So I think these three are very, very important for for infra growth as such. And the other issues, I would say they are all more secondary issues, like what you're talking about, the taxes and taxation of different sectors. I think there needs to be some kind of
alignment with global,
an incentivization, and more than looking at it from a single sector point of view. The overall objective would be to ensure that as far as infrastructure funding is concerned, this incentivizes not only the infrastructure financer but also the infrastructure players to actually take up these projects in a big way. I think we need to look at it from a holistic angle rather than look at it in a very from a segment specific perspective.
Okay, so when you talk to a lot of these CEOs of infrastructure companies, typically you get to know that the growth of infrastructure projects, very generally speaking, gets hampered in a country like ours due to a lack of timely clearances or things like land and environmental clearance issues or protracted legal disputes, etc. And these are issues which have stayed on. And there's a view like that. When it comes to these factors, according to you, has the country made progress in the past few years? Or if yes, can you give a few examples to illustrate that?
Yeah, we've had learnings. Actually, you're very right that there have been initially when we embarked on infrastructure projects, we have had a number of challenges. As infrastructure, some of the issues what you have mentioned were all experienced in the sector and dogged with problems like inequitable risk allocations between the public and private sectors, then the delayed approvals, and clearances, and a lengthy and cumbersome land acquisition and inadequate project preparation. All these things mostly are structural in nature, and structural reforms are being carried out in many ministries. The government is very, very actively engaged in doing all that, and we are seeing a number of sectors, with some tractions. It started off with the highway sector. The Ministry of Roads and Highways have really, revamped the entire, contractual and the systems for project concessions, and which is actually very heartening for infrastructure sector. We need more such initiatives from different other ministries as well, and that's happening. Though of course we look at the infrastructure sector as just coming out of teenage phase. So I think the learnings have been very quite much there, and the learning curve has been quite sharp. It's quite rapidly increasing towards north. I think that's something very, very heartening. And over a period of time, I think not only the structural and contractual reforms, but also you will see many of the reforms in the financial field. which is a need for a new financial architecture. That's something which is very important. And more importantly, I think if we need to sustain the interest of the private sector and the investments in the field of infrastructure from the private sector as well as foreign direct investments, we need a very stable law for infrastructure. I think that's what IIFCL has been propagating. We have already been engaged in this in this kind of an idea. And then if that kind of law is enacted, I think it would serve the interest of all stakeholders in the field, because infrastructure is generational in nature. It passes on from one generation to another generation as a public good, and sees the and many governments see the projects over its lifetime, and therefore you need to have a very clear the clarity about its operational parameters, and that can be done only by a law. So I think that's something which is very important. All stakeholders, I mean the financiers also, and including the public parties and the private parties and the regulators and the government as well. Everybody will benefit from this kind of law. So I think that's something very important.
Can you also share a perspective, on IIFCL itself? What is the larger philosophy, guiding philosophy? What has been its history from a growth point of view? What have been some of the key milestones that have been achieved? What are the key areas of operation, etc., and how do you look at going ahead into the future? How do you want to strategize growth?
See, the role of IIFCL has been mainly to play the last mile funder for infrastructure projects so far. In its journey in the last 16 years, IIFCL has emerged as a leading innovative lender, because all the new products in the infrastructure sector, be it the credit enhancements, be it the takeout financing or the subordinate debt, have all been formulated and have come to the mainstream for infrastructure financing only with IIFCL's intervention and IIFCL's pioneering role in this field. So I think IIFCL will continue to play its role as a leading innovative lender. And then looking at it, it has to be complementary with the banks, because obviously, you can't rule out the important role that the banks play in, financing greenfield projects. We need an environment where long-term financing happens, and the greenfield financing has to be done by the banks and the IIFCL, who have the wherewithal and the experience in the field. Maybe after that, after the construction risk is, over and the project is completed, you need to kind of, look at an architecture where, the infrastructure, the asset passes on from one set of bank to other. So I think we need architecture that which promotes this kind of, a secondary market of, infrastructure financing. And IIFCL's future role would be more directed towards that. And looking at it from, the immediate requirements of infrastructure, be it the capacity building or the policy advocacy, IIFCL's main, aim in so far as the current context is concerned, in addition to playing the role of mainstream lender in the infrastructure segment, and like the financing of the greenfields, as well as complementing and supplementing the banks insofar as the de-risking of the banks as far as the infrastructure financing is concerned, by taking over their loans and all that, and also playing a role for doing credit enhancement in the bond market. We are embarking on our capacity building and research initiatives on one side. On the other side, we have now embarked on new product initiatives where we are expected to, we have been permitted to lend to the InvITs, to invest in the InvITs, as well as invest in bonds of infrastructure project companies. So we will continue to play our role towards furthering the infrastructure financing towards supporting the national infrastructure pipeline.
Okay. One last question, if I can ask you very quickly, is can you also share, with us what has been the trend of very basic numbers, let's say sanctions or disbursements for IIFCL, let's say over the past 2 years, and what's the scene looking like for the current financial year and the year to come?
IIFCL
I'm asking more from the point of view of pandemic impact, etc.
Yeah, IIFCL used to be, on an average, it used to be a very modest number in the last 14-15 years, in the average of about 4,000 to 5,000 crores sanctions and 3,000 to 4,000 crores disbursements.
Okay.
Last year, despite the pandemic, we did a sanction of 21,000 crores, and we have financed over 10,000 crores disbursements. Our outstanding also, the overall outstanding also, the loan book also has increased to about 15%. And the overall asset size also has increased to about 70,000 crores on a consolidated basis. So over a period of time, I think this year we are aiming at a larger target base, and we would like to continue with the momentum that we have been financing. At the same time, our focus is also trained towards containing the NPAs and improving the quality of assets. And our NPAs have decreased from 10% last year to 5.39% this year, and we hope to do a further reduction this year, and also increase our provision coverage ratio, which has been increased from 49% to 63% this year.
Oh, okay. That's very nice. It was an absolute pleasure to talk to you. Time is always short, and time can never be enough for a discussion like this. There's so many things to ask, and I can only say that we really look forward to hosting you again on this platform and on this event. Nice talking to you, sir. Please carry on. Thank you for your time.
Thank you very much. Thanks.
Thank you, Mr. Jaishankar, for sharing your valuable insights. Thank you, Sudhir, for bringing out the valid points from the conversation. Now we'll proceed to the next session. Stay tuned.